Hello guys, it's a Nifty Expiry day, 9th of June. We have already discussed in pre-market analysis. If you get a flat opening, then there is a high probability that you will get a very good up move. But we got a good gap up. In fact, that's what actually expected, but Gift Nifty was indicating kind of flat opening. So that's the possibility. And since we got a gap up, and as usual, when you get a gap up, it is just getting sold into. When you get a gap down, it will get bought into also. So you can see the opportunity that I want to discuss where I doubled the premium. That's the gap fill trade. Okay. So you can see here, this is a gap up. So they just came, fill the gap. I hope you can see the screen. Okay, let me keep it like this. So yesterday gap down, it just went up. Today gap up, it just went down. Now here, when they came and filled the gap, so if you remember in the pre-market analysis, I told you if you get a flat opening, that's the best scenario. So when they fill the gap, it need to be considered as a flat opening. So what I did is I got a trade here. You can see at 11.25, I bought it at 61. And this trade exited some at 910 quantity, some at 71, some at 113, some at 117 also. Right, so 61 to 117, it's double. And then added, exited, added, and final exit is done at 115. But if you see 61 to 120, 60 to 120, that is 100% return, right? 60 to 120. Now, how I got it? Look at the time here. Where did I enter at 60? 11.25. So when it is happening, so here, exactly when they fill the gap. Now, when did I close the trade? 12.22. What is that? Is now here. This is where I close the trade. Right? So this is the entire rally. In between also, we have taken the entry, we have taken the exit, partially booked the profit. It is not that entering at 60 and holding till this level. That is not possible. Humanly impossible. If you try to do that, that 60 becomes zero. If not today, tomorrow. If not tomorrow, day after tomorrow, that will go to zero. So I don't want that to happen. So we'll keep trailing it. You can see I booked at 71 also, 113 also, 117 also. Added again, this is buy. This is buy, added at 99 and 91, exited at 112. So this is again 20 points, added at 95, exited at 103, and then 109, 115, I closed the trade. So which trade? Gap filling trade. Right? So that means you just doubled the premium. You all need to do is, if you know there's a case, wait for that. See, some of you, again, depending upon your capital, your risk appetite, you can enter early, you can keep on holding, you can average, and then you can get the up move. But if you're someone who have low capital, someone who are following me, right, my perspective, my view, where the best possibility of bounce, I am on the upside today. If you look at my pre-market analysis, I'm very clearly on the bullish side. I'm selling aggressively on the put options and I'm buying calls, but selling puts aggressively. So my view is a bullish view only, and market is about to market have to close about 23,200, and I have sold 23,200 puts also aggressively, and it should be even. I won't be surprised if it break days high also. So what is the best level for you if you have a low capital to buy? When they fill the gap. That's what I discussed in pre-market. If you get a flat open, best place to buy. If you get by chance gap down open, that's the great opportunity to buy. Even if you get slightly 50-point gap up, still you can buy, but you got a 150-point gap up. Then it got sold into and then fill the gap. That's the buy opportunity. Now, if you have any confusion, please look at the pre-market analysis. This is exactly what I told. So guys, if you would like to join our live market mentoring program, I teach in live market when I trade. You can join our session. I see you there.